Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 8th of April 2021, and we're looking at a slight recovery in gold and silver prices. See, on Monday we published a video entitled Gold and Silver Prices Dip While UK and European Markets Are Closed, where we highlighted that the previous Friday gold closed at $1,730, and at the time of the video, which was at 14:45 GMT on Monday, gold was down just $7 at $17.23, and silver, having closed at $24.99, was down some 13 cents at $24.86, having recovered from being as low as $24.63 earlier. Well, as at 22:17 GMT, that's this evening, with markets now closed, we can see that gold has risen to $1,756. That's $26 higher than Friday's close. And silver is standing at $25.48, some 49 cents higher than Friday's close. Now, frankly, this is not totally unexpected, bearing in mind, particularly, that the jobs data on Friday was indeed positive, and the markets had to wait for the UK and Europe to open on Tuesday after the Easter break, and the initial pressure was down because of the positive job figures. But for the reasons we shall cover in a moment, we saw a reversal, and prices begin to rise again. You see, looking at the dollar index, we can see that it's down today and has been down this week, and is lower than Friday's close. It's currently 92.06. That's down 0.39 points today alone. If you recall, we were looking closer to 93 towards the end of last week. Now, economic data has been positive up to and including yesterday, but the weekly jobless figures announced earlier today show a rise from 728,000 to 744,000, which is a 16,000 rise. Although admittedly the continuing jobless claims has improved a little by some 20,000 jobs. Now, this weaker jobs data caused yields to fall, including long-term yields, which has in turn pressured the dollar lower. Now, one looking at the figures can almost make a direct comparison with the falling of the US dollar with a rise in gold and silver prices, as frankly there is little difference proportionately between the rates, which means that the US dollar value has had the main effect on the prices of those precious metals. So we now have a situation where, as far as gold is concerned, resistance is seen near the 50-day moving average at 1,763, and support at the 10-day moving average of 1,725, with our much commented on previously 1670, that's $1,670, below that figure, which represents the June lows, though we're not envisaging seeing it fall to that tomorrow. Now, while silver is attempting to migrate towards $26, there is considerable resistance here. But owners, fortunately, can expect a moderate degree of support at $25, with the 200-day EMA at $24.25 lying underneath as very solid support. So unless something surprising is announced tomorrow, we're expecting silver to generally move within the $25 to $26 range. Now, the main economic news we have coming out tomorrow, in the United States that is the Producer Price Index for March and wholesale inventories for February. Arguably, the Producer Price Index is more important, that we don't see it as being a major game changer. Bitcoin, interestingly, is hovering between $57,000 and $58,000, while equity markets are holding moderately firm and staying quite buoyant. The Dow is up 57 points at 33,503. The S&P 500 is up 17 points at 4,097. And the Nasdaq is up 140 points at 13,000. 829. UK and European markets closed broadly up around 0.5%. But perhaps the most interesting news today has been the comments raised by Fed Chair Jerome Powell. Now, Bloomberg reported the following about an hour ago. It's relatively short, so we'll quote them exactly. Quote, "Stocks climbed as Federal Reserve Chairman Jerome Powell said the central bank has the tools to curb any inflation pressures, which are expected to be temporary as the economy reopens." The S&P 500 notched a fresh record amid slow trading. Volume on US exchanges remained under 10 billion shares, hitting another low for the year. The Nasdaq 100 outperformed major equity benchmarks as giants such as Apple Inc. and Tesla Inc. rallied. Energy producers and banks retreated. Treasuries rose while the dollar fell. One day after the Fed's March minutes struck a dovish tone for the path of monetary policy, Powell said the central bank would react if inflation expectations started moving persistently and materially above levels officials are comfortable with. He also noted that the disparate efforts to vaccinate people globally is a risk to progress for the economic rebound, which remains uneven and incomplete. The doves are in control, and today's cautious comments from Fed Chair Powell delivered another reiteration of their ultra-accommodative stance, said Edward Moyer, senior market analyst at Oanda in New York. Meanwhile, Fed Bank of St. Louis President James Bullard said it's too soon for central bankers to discuss tapering asset purchases as long as the pandemic continues. Data Thursday showed applications for US state unemployment insurance unexpectedly rose for a second week, underscoring the choppy nature of the labour market recovery. Unquote. That's the end of that article. What is becoming abundantly clear is that there is no appetite, at least for now within the Fed, to jeopardize the recovery by tapering too early, as it did a few years ago. It's clearly willing to wait until growth is well underway, unemployment falls back to similar levels to pre-COVID days, though we suspect that may indeed take a while, and inflation will probably have to rise above 2% before the Fed actually really begins to act. This is all very well and good, but one also has to bear in mind that foreign exchange markets are also affected by other factors than the bank's lending rate or Fed funds rate alone, and one may indeed see the market dictate yields to the Fed rather than the other way round. Either way, for now at least, it looks like gold and silver are moderately underpinned. And although we may see some lower prices, we're not really expecting any significant change just yet, in either direction, up or down. There could, however, be some impact once the proposed Biden $2.25 trillion infrastructure plan progress is well underway. But again, we suspect that may be a few weeks before that begins to seriously materialize, as we know that the Republicans seem to be hell-bent on ensuring it does not pass, once again potentially leaving the Democrats to rely on its Senate majority of just the casting vote of its chair. What do you think? How do you see prices moving in the very, very near future? Of course, those of us who invest in gold and silver do so for the longer term, not the short term. Has perhaps Bitcoin also now reached its peak and is consolidating somewhat? Or can we expect another spurt forward in that area? And what about the other precious metals? Do share your thoughts. Thank you so much for listening. If you haven't done so, do subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.